Bitcoin is finally waking up. After weeks of slow, choppy, sideways action, we're starting to see a sizable move to the upside, and the momentum is spilling over into the altcoin market, with plenty of green showing up across the board. So what does this mean for the next major move in crypto? Is this the start of something big or just another tease before the next shakeout? Today we're breaking it all down, key levels, market sentiment, and what to watch in the days ahead. Be sure to like and subscribe if you haven't done so already so you don't miss out on any of our daily uploads. My name is Paul, this is DataDash, and you need to grab yourself a cup of coffee, whether it's hot or iced, because I'm breaking it all down right now. All right, everybody, to start the week off, we've got a nice little pump here on Bitcoin. At the time of recording, we're just breaching over $87,000. And honestly, I'm imagining that we're going to see a push up towards these two levels that we've been eyeing for the last few weeks here. We've seen Bitcoin pretty much consolidating in this region around this 80,000 up to about 85, 86K for the last couple of weeks here. Had a really nice bullish consolidation right here. And so far we've gotten a pretty decent break up. Now, once again, we have a high time frame average, which is likely to be met this quarter, sitting up above us right at about $89,630. There's also a volume level just above that I've noted at 90,000, just really within that same region. Let's just call it $90,000 to be fair. Now, this level to me is the key level above us as far as any resistance would go. That if we were to flip into support, aka break above, hold above, realistically for 4-hour candles, ideally daily, that is the next major area I'd look to for that next confirmation that we're going to continue higher. So up until then, what that does mean, of course, now is that we can go all the way up towards this $89,000, $90,000 region. And if we get a rejection from there, something to be really weary of. And that really would do nothing here for us aside from just keep us in this ranging region. And there's two reasons I really look to this $89,000 area. We've been discussing it basically since we started April. One is that coming up above this area right here, once again, is like flipping a major moving average. This is the average of price for the last 90 days that does not move, very similar to a 50-day moving average. When you get above it is bullish, when you're below it is bearish. For us to come up and retest this or just test it in general, this is currently untapped. This is an average of price that is generated from last quarter, so it has not been met since we've generated it. And while we're below it, of course, we have to anticipate that we could very well come up to it, kiss it, and get rejected. Now, the key here is that if we flip that level specifically, two things are occurring. One is that we're flipping a high time frame average, aka once again, a moving average that does not move, into support, which is a pretty decent sign of strength in my opinion. The second being that when we started this quarter, one thing that I've noted since we've done that is that we have a brand new range just above us that we basically set in stone at the end of Q1. And then generally what we see here is that usually in the following session, so in this case, the next quarter, which is now Q2, if we are to breach into this region, it's likely just in general, when you breach into a range, the likely natural target is to head up to the point of control, which once again, this is just a high volume area. This is the highest area of volume that's taken place in this region, and price action will seek out that point of control. At the moment, it is untapped or naked, an NPOC. That is a very crucial level to me, in my opinion, at the time being. And if you'll note here, that $89,000, $90,000 area is the bottom of the range, right? So if we were to come up and flip that 90K, you're flipping a high time frame average into support. We are then also entering into this previous range here, likely to run it up into this region. $93,000 and $96,000 area would be the next two major areas for Bitcoin, which in turn, if we were to see a move like this, the altcoins and everything else in the market would, of course, be following with it. Now, while 89, 90,000 is that key level at the moment, since we are now trading basically just below it, I will say that the setup is there, right? We've started off this quarter. We've been deviating below that range. We actually came down and took out the low. So we swept the low from last quarter, which if we look at this setup on any time frame, usually on a daily, a weekly, we see it time and time again where you come over and you sweep the previous high or low, and then generally you run it right back in the other direction. This is a pretty high time frame range, so obviously this would take a little bit more time than something that occurs on a daily window or a weekly. So this still does remain the most probable outcome at this point. Obviously, we're trading just below 89, 90K, so it doesn't seem like it's too far away at this time. But then I'll be looking really strongly here. Probably going to see a little rejection, maybe even back down to like $84,000 if we do come up to that 89. Also, there's a new weekly pivot, which is our average of price from last week. that is generated around that region as well. So likely to, maybe play around in this region for this week. But if we don't, and if we push into this range, like I said, the most probable is that we're going to push it up to 93 to 96. And then at that point, you look for the strength of that level 2 for a full-on range rotation. In this case, from low to high. And folks, you'll notice I didn't bring up a single piece of news. I haven't looked at even what has possibly been thrown out there that is causing the price to rally. This is a really natural setup that we see time and time again. I'm sure there's going to be something paired with it. And at the moment, it really does come down to that $89,000 level. If we flip it, it's definitely what I'm looking for that sign of strength, for more of a green light for more upside for the following weeks. Otherwise, if we get a rejection there, we're going to remain range bound, right? Another key element I wanted to point out here is that just when we traded down around that $74,000 mark, when all the tariffs were running amok and everything was super fearful, we were getting into extremes of fear, right? Where everyone was finally getting on board with saying, okay, the bull market is over. The price has to come lower. Even though the price action is really doing nothing super strong at the moment, and we're really nowhere we haven't been in the last few weeks, I just like to point out that when we come down to those key regions, it's the same thing time and time again. Extreme fear, basically, at more so the most opportune areas. And at the end of the day, we have setups like this where we have simple range data. There's also the sweeps of the highs and sweeps of the lows that we'll see time and time again. And at the end of the day, every quarter, we generally get these ebbs and flows where we just kind of rotate around the previous session or the new one that we're creating at the time. And it really does just come down to utilizing a strategy among your investing plan, whether that's short-term, long-term, what have you, but tuning out a little bit of the noise, right? The news is going to come, the news is going to go. And I'm not stating that by any means, like the news doesn't matter. I know, there are definitely areas and times where it will seem like the news and everything is marked together, but this is a really great example here where we just saw pretty much extreme fear around the current low at the moment. Maybe we do roll over around that 74,000. We've seen nothing but a pretty decent up move since then. Just the same way that when we were trading at the all-time high of 110,000, we were at extremes of positive news, euphoria, extreme greed, basically, right? Everyone was anticipating that this market was just going to absolutely skyrocket after inauguration day. And while the move that I'm highlighting right now, where if we do break into this range I'm pointing out at 89,000 and potentially rotate that range, which is once again a very technical move that we see time and time again, that would put us back to almost over $106,000 at the high, with once again not overlooking 93 to 96K, of course, but it would be yet again a move where fear sets in at the low, the market runs it back. This is exactly what we did actually at the all-time high, right? So in the current case, I'm pointing out that we swept the low here. We're just looking to get into this range, got a few key targets here, potential for a range rotation, right? Simple, high level. Obviously, there's going to be some tomfoolery along the way. We need some confirmations, of course, but without even looking at any type of a news catalyst, that move right there would not surprise me, and I'm very much prepared for it and positioned for it. The same way that when we were trading up at this high, $110,000, just as I just pointed out, we came down and we took this low currently, and we're looking for a run back up here. We did the exact same move back in January. We had a previous range that we had just completed. We ran up, we took the high in this case. So we're trading at the lows this time. We were trading at the highs this time. And all we did was move on down and rotate that range, in that case from high to low. So for now, looking for a very, very similar move here to take place with three really key regions right now. 89,000. 93 is actually a really big one. We'll touch on it more as if the price action ends up coming up to it. And then overall, flipping that 96K would really lead me to believe that we're going to rotate that range up to the 106,000. And then at that point, we really will be able to consider new all-time highs once again. If you're looking to stay ahead of the next move, not just on Bitcoin, but across the entire market, I share nearly 24/7 updates inside my private Discord. From short-term setups to long-term outlooks, you'll get real-time analysis, actionable insights, and access to my full trading academy where I break down all the tools, indicators, and strategies I use every single day. If you're serious about leveling up your trading, click the link down below to join, and I look forward to seeing you all in there. I wanted to point out a bullish reversal setup that's potentially here on the total 3 chart, which is all the altcoins in the market for crypto. So basically everything but Bitcoin and Ethereum. So everything else. And recently we saw a nice little drawdown here, and this is a harmonic pattern here, which is a sequence of Fibonacci's, and this is actually a bullish setup here, right? As long as this current low is our holds as our low, I'm looking for a bounce back up to two specific targets here, which is just a simple Fibonacci retracement from our A point to the D point. And the one being the 382 retracement is also our B point here on our harmonic. These are two targets usually, and in this case, they both align at the exact same point. And then also after that, it would be the gold pocket. So while even if Bitcoin doesn't necessarily push up to new all-time highs, and we only see a move maybe up to where we are now or up to 89,000 and we get a rejection, this is in line with stating that the altcoins should see continued upside as well. This is about a 10% move in the total market from where we are now to the next or to the first target area. And then after that, if we pushed up to the golden pocket, which is the second target of this pattern, it's about a 25% increase. Once again, this is the total three markets. So every single altcoin in the market, all grouped up in one. Obviously, some will outweigh each other depending on their market cap, and this is everything but Ethereum. Solana has also come down and completed a bullish shark harmonic pattern here too. This pattern is probably one of my favorite ones to be aware of, one, and two, trade off of. It's known for essentially taking out the highs and then coming down and taking out the lows, effectively wiping out both sides and then reversing at that point again. So really nice, clean shark pattern here. The specific targets for this are the first one that comes into play up at the 0.5 Fibonacci retracement, and that is at $196 currently. Currently, we're trading at $141. We had just made our way to one of the smaller speed bump targets that I've noted, which was the monthly pivot. So the average of price for last month, likely to be met this month, which was a really big target level that I've been looking at. And especially when we did come down and complete this region right into a high volume level back in earlier this month. We came right down to that $97 level that was right below $100, right below all the lows. Obviously, we completed this harmonic pattern, and it gave us a nice setup for, even if we didn't reach this region here, 97 to the 138 pivot was a 40% move that we've already seen now in Solana. So looking to hold that region here and then look for our next impulse move up. We've got a quarterly pivot just above us in between us, which is sitting at 177. And ultimately 196 is going to be the next major target here for Solana if we continue to see price move up. I'm going to touch on Ethereum here as well. And one thing in the trading and investing community, right, we kind of tend to joke about some things where you tend to see the stairs up and then the elevator down, right, where we see these slow grinds higher, usually only meant to see just a huge unravel, right? You get this quick move to the downside, huge crash, wipes out everybody. In this case, we've seen what I'd consider, honestly, a stair step down, which really reminds me of Bitcoin, to be honest, back in 2022 when we topped out at $69,000 early in the year. And we just slowly made our way down all the way to basically the low of about 15,000, pretty much just straight down for that time frame. And then we got essentially a huge rally right out of that region. By no means is this a direct comparison, but for me, this is a region on Ethereum specifically, and just the way that the market looks at this point, where I'm looking to see if we actually get something along the same lines, where we've got the staircase all the way down. And for me, I'm looking to flip 1670 on a daily closing basis. Right here on the 4 hour, you can see, I mean, we've been down here pretty much ever since the 7th of April. So we've been just consistently closing down in that region. So until we close above it, really can't get too excited. But if we do start to close up above that region, I think that price has really been compressed down here. And as well as we have sizable levels just up in this region here. There's a harmonic pattern here as well, which is also a bullish setup here where we have the price action making its way down in this region. This is known as a bullish bat. So very similar to what we were just looking at on the total 3 market. And for me, I'd look for more confirmation of this being in play when we do flip, and if we do, $1670, $1,670. That's the key region here. And then from there, this pattern specifically gives up 2 targets, one being the 382, the other one being the gold pocket. The B point is, once again, another target level as well. And in the previous setup, the B point aligned with the 382. In this setup, our B point actually aligns with our gold pocket. So a lot of confluence up here, a weekly untapped point of control up here as well, all the way back up at $3,100. It seems like that price is so far away and it would never come. just want to point out once again, need some more confirmation above this region here, but we could see some things happen in a hurry. So just really being really vigilant in this region. And that's where like the joke almost would come in that we took the stairs down and we may end up seeing an elevator up situation for the first time in a while. Yet to be seen, of course. This is still really just coming up and making potentially a lower high on Ethereum. Doesn't necessarily mean new all-time highs by any means, but it does mean a sizable move to the upside here, right? If we do clear this region, I mean, we're talking 25% up just to our monthly pivot, our average of price last month. If we flip that and we get to our first harmonic target, that's a 50% move from where we are right this moment. And then if we push any higher, you're talking about a potential 100% move from where we are now, which obviously, like I said, would lean into the altcoins as a whole, seeing a sizable move and then some, right? So really looking here on Ethereum, obviously the whole market doesn't need Ethereum to push up, but if Ethereum gets running, usually it's a good sign. Just wanted to touch on gold as well. We barreled through that gold pocket here and just pretty much, I think we got our sights lined up for the next major level here at the 1-to-1 at 3,600. Nothing's really changed there since our last update. And then the last thing I'll leave you with here is that the DXY is actually about to come into a major multi-year target. Sitting here, just as we were looking at Ethereum a moment ago, and we had that harmonic pattern I highlighted. That's a bullish setup, even though it takes it's a bearish move all the way down to set that up. Quite the contrary here, we have a bearish setup on the DXY, and this is on a major time frame here. This is a weekly chart here. This is going all the way back to 2001. This is over a 20-year setup here that we actually completed in 2022. So it's been completed for a few years. We had a perfect little drawdown here. We back tested, put in our nice lower high right into a gold pocket where I'm just pulling off of a simple high to low here. Got our rejection, and we're coming down now into our first major target of this harmonic pattern. And that does come in basically right below where we are now. So 382 Fibonacci retracement. Generally, it's not always a picture perfect setup, obviously, because we've been dropping and the market hasn't necessarily been just completely ripping up by any means. Generally, there's a bit of an inverse correlation to the DXY and risk assets such as stocks, crypto, and so on. And usually when we see this coming down, those assets get a rise. We'll point out that we're coming into a major target zone, so we may see a little bit of a bounce here. But ultimately, I'm anticipating the DXY to make its way down into this region here. And over time, and I do mean time, I mean, we're looking at just to get to our first target here. This has taken almost 3 years. I do imagine we're looking at probably another 18 to 36 months before we make our way down to the gold pocket target, a little bit lower down here, our B point, right, which is an untapped yearly level as well. So there's a little box here of big levels that are just below this. But ultimately, that's what I'm looking at in the DXY, which may lead to a pretty sizable run in the markets. All right, everyone, that's going to do it for today's update. I hope you found it helpful as we continue tracking the latest moves in the crypto market. As always, everybody, I'll see you all in the next video. And until then, everyone, cheers.